Ticker symbol SONN got the upside closure on the monthly that we were looking for. Let's go ahead and go over the potentials for the following days. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with an SONN technicals, raw price action, and statistical threat of analysis on this Thursday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them can consider joining our trading community in Discord called ARCa Bulls. With that said, let's go over the charts. Okay, so please take a look right over here. Okay, so this was the previous monthly candle, right? This new candle just started. We have the new print for all the days that we have to wait until it closes again. And we were talking about this candle closing anywhere upside of the opening from the prior month, right? So the opening, this is the OHLC, right? The open, high, low, close valuation of each candle. So if you can take a look right up there at the opening of this candle, it was $23.95, which is right up here, right? So we were talking about $23.95. I'm sorry. Sorry. The opening on the O. What the hell's going on? I saw that C as an O. So yeah, that opening should be about 36.49, right? We're closing this following monthly candle anywhere upside of that target from the opening from the prior candle would be a bullish statement for SONN. We in fact got that closure, and that closure came in right at about 51.19. Okay, so of course we're getting a little bit of red days here, you guys, but that's normal, and that's usually to test the top side of the prior month, right? So in this case, the prior month is suggesting a top side of about or a bottom side from our trajectory of about 40.19, right? So 40 cents. Now, what I would like to point out here is that from the, it's hard to see this right now, but the tiny details are starting to show, right? This is the stochastic momentum oscillator, which gives us the bias for direction when paired with volatility since it's direction neutral, right? So we are increasing volatility even still. And now that we're getting, if we just zoom in a little bit here, now that we're getting an upside pivot on the stochastics, the upside starts to become a little more relevant than not. Right. So, but at least on the monthly, right? So we have to look at the shorter time frames to see exactly what that potential could be, because there will be lots of up and down in the shorter time frames, right? So now let's go ahead and go over the next chart and see what we have. Okay, so this is the bi-daily volatility versus momentum back test paired with DMI, right? So this is a back test that I actually performed throughout the entire trading history of the SONN asset throughout the bi-daily chart, right? So these are all of the samples. These are all of my notes. So anytime that volatility has expanded into critical expansion zones, which is within the 90 percentile, and started a contraction phase, paired with stochastic momentum with an upside pivot, I have taken note of every time or every iteration where that has happened, right? I took note of the duration of the iteration, which says 14 days, right? The upside thrust of that iteration upon the maturing of the signal. In this case, it was from contraction, and as soon as it touched from expansion, and as soon as it touched that contraction level, the critical, which is 15%, that signal would be entirely off, right? So this was a 21.21% move to the upside, and marked correctly guessed via the footprint model, what I call the volatility versus momentum paired with DMI. And actually volume weighted as well, right? So now upon that, actually now this is the data set, right? Now that I got that entire back test, we're able to see the statistics behind it. And I actually took the statistics to 2 further steps than the usual, right? So in this case, throughout the entire trading history of the SONN asset on the bi-daily chart, we measured 23 iterations, of which 17 were guessed correctly to the upside, giving us a 73.91% upside accuracy. And the mean, or aka the average upside thrust, came out to 92.02%. Okay, over the span of about 30 or just under 35 days. This is the proof of work here. And now the 92.02% mean does have a standard deviation of 59.34, right? So in this case, if you're not familiar with statistics, right, just to kind of reiterate for everybody here, then this is representing the bell curve, right? So something like this, let me just go ahead and make a quick little drawing of it so that we can all be kind of in the same page, right? So yeah, something like this gives us that bell curve. So let's draw now the the center area so that we can understand where the probabilities will kind of land, right? So, and now we'll draw two other lines just like this. Okay, so now the probability curve here is telling us that a standard deviation of 59.34%, that would be where 68% of the results land, which is this distance here from the bell curve, right? So 59.34% of the results land within this area here. Now, based on the conditions, right, based on the criteria that volatility versus momentum had for us, we have a almost a 74% chance that we can make a move, of course, to the mean. But that also gives us a 74% chance that we can make a move of the lower bound of the first standard deviation, which is this area here. So that would be a minimum move of about 32.08%, or a move from the upper bound of the first standard deviation, which is right up here, 151.36%. Okay, now if we look at the mean of 92.02%, that gave us that pretty much showed us that we were about to mature the signal, right? So you can see here that the move actually ended up making, let's see, it ended up making about 125.92% from the 92% upside, right? So even into this area here, 129%. So, which is actually favoring the upper bound of the first standard deviation instead, right? So the 153%. What's curious is that both the mean and the upper bound of the first standard deviation are very much the ones that we're focused on, right? So we would get a 74% chance that we would make a move between 92 and 151%. Or in reality, 32% to 151. But in this case, yeah, the mean provided a very, very critical information here for us to evaluate, right? So now, if we were to apply the 151% move to the upside, that would actually take us to a target of 59.70. I'm not saying that we're done and we're never going to go there, and I'm also not saying that we're going to go there tomorrow. In fact, we still have some downside to look at first so that we can allow the new bulls to come in and, kind of reload here and take the price action onwards and upwards, right? So now let's go ahead and validate that theory, since now we've gotten the statistics in a very detailed manner out of the way, right? So let's go ahead and move on to the next chart and see what we have here. So this is the daily Gaussian channel, another statistical metric or indicator here that gives us higher probability targets within the range of trading that we are presently in, right? So in this case, you can see that we are now starting to break outside of the Gaussian band. But as you can see here on the daily time frame, you can see that we haven't come back to validate the support from the mean band. So anytime that we do break upside of the mean band or break out from the mean band here, it's very likely for us to come back and test it as a viable support before a continuation to the upside, right? So in this case, we made it to the outside, we broke out, but we didn't have any candle closures outside of the mean band, which would only indicate that the price action may actually consider coming back down to the range of about the 1.272 at 44 to about 43 cents, 43.40. And why does that sound so familiar as already? First of all, we're talking about the monthly retracement here. Please take a look at the top side of the monthly previous closure, or the 2 months ago closure. That wick is actually leading us to a high of 40 cents. Okay, so that's already giving us a range. 40 cents is there. Okay, let's go ahead and come back to the next thing, right? So already here, yeah, we're already seeing the space of about 43 cents here from this mean band and 44 cents from the 1.272. The next chart is what gives us some more information too. Okay, so please take a look at this right here. Okay, so I'm gonna go ahead and just delete this right now and take a fib from this candle here. So this is the candle that essentially gave us that shakeout before the continuation to that upside to about 56 cents, right? So let's take that into consideration. Swing high of this candle to the swing low. This is a 4-hour time frame, by the way. Okay, so let's go ahead and draw it just like this. Okay, and now please go ahead and notice that the 0.618 golden mean, where the trade usually likes to take things to, is located at just about 43 cents. Okay, so that is now geometrics landing with statistics to that 43 cent target landing with a higher term statistical target at 44.43, and also raw price action landing at about 40 cents. So that naturally gives us a support range, right? So that support range would be the space between 40 cents, which I'm just going to draw right over here, right? So 40, look at this, the one fib is right at 39. So, I mean, yeah, so it would be just like this here, right? So let's just go ahead and take 40.01 into the space of about 44.43 at the one spot 272, right? So we're favoring the side of about 43.44 though, okay? So 43.44 is essentially the bounce that we're looking for, and this is the new area of support. Okay, so based on all of those metrics, that's just kind of how I see the markets, how I perceive things to be, and you know, it really just use your imagination, right? You guys just practice as hard as you could per your